I've been closely monitoring the personal finance forums lately. It is a truly fascinating, almost tragic split screen of human panic on one side and absolute, unchecked delusion on the other.
Wait, are you talking about those viral videos? The ones where hardworking people are literally filming themselves having mental breakdowns over a $10,000 or $15,000 tax bill?
Exactly. They worked 60-hour weeks. They finally climbed the corporate ladder, got that senior promotion, and suddenly the IRS swoops in and strips away their perceived progress.
Because they are being stripped. That 10 grand is real hard-earned money. From their perspective, you finally think you're moving up the socioeconomic ladder, maybe beating inflation for once, and boom, the system treats your paycheck like an all-you-can-eat buffet. You can't blame them for panicking.
I don't blame them for the panic. But let's look at the other half of that digital screen. The crypto bros and day traders on Reddit screaming to short Intuit and H&R Block with maximum leverage.
Okay, but let's be totally honest about the tech argument. People deeply resent TurboTax. It's notoriously expensive and aggressively upsells you. If Claude or ChatGPT can parse a complex tax scenario and perfectly fill out your forms in 10 minutes for absolutely free, why wouldn't these bloated tax giants collapse?
And that right there, that exact line of thinking is exactly why the middle class stays the middle class, generation after generation. They are fighting fiercely on the completely wrong battlefield.
Explain that. How is it the wrong battlefield to use a faster, cheaper AI tool to beat a corporate monopoly? It looks like a textbook case of technological disruption.
Because to the employee crying over the massive W-2 tax bill, you mistakenly believe that the IRS is a strict, impartial math teacher grading a standardized test. You think the system is designed to ensure everyone pays their fair share based on hard work.
In other words, they think if they just catch more mice, the farmer will naturally let them keep more of the meat?
Precisely. But the farmer doesn't care how hard you hunt. And to the arrogant amateur trader shorting the tax giants, you fundamentally believe that tax software is nothing more than a sophisticated calculator.
So you're saying even if AI is the ultimate, flawless calculator, it doesn't matter? What are these companies actually selling if it isn't math?
You are fundamentally, disastrously wrong on both counts. The federal tax system isn't about arithmetic at all. It is a highly sophisticated system of behavioral control. And those multi-billion-dollar legacy companies, they aren't selling math to the masses. They are selling a very specific, invisible shield. To understand the invisible shield these legacy companies sell, you first have to understand the weapon it protects against. Let's talk about the federal tax code itself. Most ordinary people look at it and see a massive, frustrating math problem. But the government doesn't see a math problem. They see a steering wheel. The tax code is, at its core, a 75,000-page manual of behavioral engineering.
A steering wheel for what? Because right now, from the perspective of the working class, it feels like it's steering a massive bulldozer straight over their bank accounts. Explain the fundamental logic to me. Why does a senior software engineer making $150,000 a year pay a drastically higher effective tax rate than a billionaire CEO who spends his Tuesday afternoons playing golf? It defies all basic human logic of fairness.
It defies your logic of fairness because you are operating on a moral framework, while the state operates on a macroeconomic utility framework. The government does not care about your concept of fairness. The government is a massive enterprise. To survive and grow, it desperately needs two things: massive capital allocation and continuous job creation. If you are sitting on a standard salary, you provide neither of those things.
Wait, hold on a second. We are providing labor. We are literally the ones executing the tasks, writing the code, running the spreadsheets. We are the ones, in your terms, catching the mice every single day.
Exactly. You are catching mice. It is an active one-to-one manual transaction of your highly finite time for capital. But here is the brutal truth. The government doesn't want mouse catchers. The government wants people who build fish farms.
Okay, unpack that metaphor for the audience. The fish farm. Break that down for the guy who just got absolutely wrecked by his accountant this April.
Think about it. If you build a fish farm, meaning you start a corporation, acquire commercial real estate, or invest heavy capital, you are creating an infrastructure. You are creating a system that feeds the economy without your constant physical presence. You are also taking on massive, unhedged risk. You might go entirely bankrupt. The state wants to heavily incentivize that specific risk-taking behavior because the state cannot build those farms itself.
So they reward the risk takers by cutting their taxes.
They don't just cut them. They heavily subsidize them using your money. For example, if you buy a commercial building, the IRS allows you to deduct the depreciation of that building against your current income, even if the real estate market is booming and your property is actually appreciating in value. They literally hand the asset class phantom losses to legally erase their tax burden. Why? Because that person provided housing or commercial space. They provided infrastructure.
And the standard worker? The mouse catcher? What do they get?
The standard worker takes zero entrepreneurial risk. Your only risk is getting fired. You don't create external jobs, you don't build physical infrastructure, and you do not stimulate capital velocity in a structural way. You simply trade 40 hours a week for a fixed amount of fish jerky.
So, the heavy taxation on a normal paycheck isn't just because the government desperately needs money to pave roads and fund the military. It's a penalty?
It is a harsh, systematic penalty. When the IRS taxes your income at 37%, they aren't just collecting revenue. They are sending you a very clear, very cold message from the system. We do not value the way you choose to survive.
Okay, fine. I accept the depressing reality that the system deliberately penalizes my regular income. But let's pivot back to the tech bros. Why are they so wrong about shorting Intuit? Because Claude 3.5 can literally read the entire 75,000-page tax code in seconds. It's objectively a better tool than a clunky TurboTax questionnaire.
Because they mistakenly believe Intuit is a software company. It is not. It is a highly specialized political lobbying firm that sells extortion insurance to the middle class.
Extortion insurance? That is a very heavy, very specific accusation.
Let me give you a metaphor. Think of the IRS as a very aggressive, very hungry guard dog roaming the neighborhood. What ChatGPT gives you is a highly detailed, instantly generated map of exactly where the dog is.
Right. It calculates the optimal path to walk around the dog. It gives you the math.
Yes. But what TurboTax sells you is a certified, legally binding, anti-dog fence.
You're talking about legal liability.
Exactly. Imagine your shiny new AI makes a slight hallucination on a complex deduction, and 18 months later, the IRS decides to audit you. The dog is at your door. What are you going to do? Are you going to print out your ChatGPT log and show it to the federal tax judge? Your Honor, the AI told me the write-off was legit.
Yeah, that is definitely not going to hold up in federal court. OpenAI's terms of service explicitly state they are not financial advisors and take absolutely zero legal liability.
Precisely. AI has zero skin in the game. But Intuit, they literally sell a product called Audit Defense. When you pay them that annoying fee, you aren't buying a faster calculator. You are buying a corporate umbrella. You are paying a protection fee to the gatekeeper, who spent decades and hundreds of millions of dollars lobbying Congress to write those exact complex rules. They are selling you immunity from the state's violence.
So, the day traders shorting the stock are betting on a pure technological disruption?
In an industry that is fundamentally built on political entrenchment and legal liability transfer. They brought a very fast calculator to a knife fight with the federal government. It is pathetic.
So, if Intuit is selling a corporate umbrella and the IRS is the storm, what happens to the person who can't buy that umbrella? The regular working class person who just got a $20,000 raise?
They get absolutely soaked. But it's worse than that. They actually get punished for trying to climb. Let me ask you, what is the ultimate American dream for the working class?
To work hard, get promoted, make a higher salary, and save enough to eventually be financially free. It's a linear path.
Exactly. It is a linear progression model, but the tax system is progressive. Do you know what that actually means in practice? It means the harder you pedal the bicycle, the thicker the mud gets.
Wait, break that down. People always say, oh, it's just marginal tax brackets. Only the extra money is taxed at the higher rate. It shouldn't mathematically be a trap.
That is the most dangerous half-truth taught in personal finance. It's not just the marginal rate stepping up to 32% or 35%. It is the phase-outs, the invisible guillotine. When your income hits a certain threshold, the system starts quietly confiscating your survival tools. You lose your child tax credits. You lose your student loan interest deductions. You are locked out of contributing to a tax-free retirement account.
So you don't just pay a higher percentage. The system actively strips away your legal deductions at the exact moment you start making good money?
Yes. Let's look at the math. You get a $20,000 promotion. You take on way more stress, longer hours, and massive corporate responsibility. But between federal taxes, state taxes, payroll taxes, and the loss of those deductions, the government takes 40% or more of that raise. Then, true inflation eats another 5 to 10%. Your actual, real-world purchasing power barely moves an inch. You bled for that promotion, but you are effectively standing perfectly still.
That explains the absolute despair in those viral videos. People feel like they are running on a treadmill that keeps speeding up, but they are glued to the exact same spot. Is the game just totally rigged from the start?
It is rigged, but not by some shadowy cabal in a smoke-filled room. It is rigged by structural design. The system assumes that if you are smart enough to generate significant wealth, you should be smart enough to change the classification of that wealth. The ultimate tragedy of the hard-working middle class is this. They are desperately trying to solve a tax classification problem by simply working harder at their jobs. And that is a mathematical impossibility.
So, if the mathematical reality is that working harder in a standard job system just makes the mud thicker, what is the actual way out? Because everyday people can't just quit their jobs tomorrow and become venture capitalists.
No, you don't quit your job tomorrow. But you must radically shift your focal point. You have to stop playing the finite game of how do I get a bigger paycheck and start playing the infinite game of how do I convert my labor into equity.
So, to use our earlier metaphor, stop trying to build a faster AI mousetrap and start figuring out how to own a piece of the farm.
Precisely. Stop obsessing over whether an AI can save you $150 on your tax filing fee. That is a distraction for the poor. Start looking at how the federal tax code actually rewards behavior. Start a limited liability company. Acquire a cash-flowing asset. Create intellectual property. Buy a duplex. You must transition your identity from a pure consumer of the economy to a provider of its infrastructure.
Because the moment you do that, the IRS stops treating you like a target and starts treating you like a partner. You step behind the invisible shield.
The ultimate truth of modern capital is this. The working class is forever obsessed with filling out their tax forms perfectly. The elite are obsessed with changing the fundamental nature of their money before the forms are ever printed. Wealth is not determined by the software you use to calculate your taxes. It is determined solely by which line your income is legally sitting on.
Thanks for joining us in the boardroom. We'll see you next time on Fat Cat Capital.